Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on the euro currency. So we could see that general scenario that we have discussed in the previous couple of sessions and in the weekend as well. It's almost done. So market has touched precisely 1050 area. We said that we're mostly considering the target that stands around 1050 on the intraday charts, and because of the daily overbought. So we are not considering right now the target that stands here. It's 1180. With the XOP with this big ABCD pattern. So correspondingly, the next target that we will consider to the upside also will be based on this minor ABCD action pattern that we have actually on the intraday charts, and that's where the OP with this minor pattern stands. But for now, there's two moments to keep an eye on. First of all, recent numbers on the CPI that we've got has not become the surprise. But actually, I suppose that at least based on the gold market reaction was a bit surprising to me, just because you can see it stands so different to euro currency. So if euro currency has shown the upper direction and completed the target, on the gold market was opposite reaction. I don't know, maybe some additional factors has involved here, but in general, it seems that market was expecting some more significant drop in inflation. So yes, it was mostly in row with expectation, even slightly better, but not enough better compared to what we've got on the PPI. This was total surprise, positive surprise for the markets, and that could explain the reaction probably on the gold market. On euro currency, it stands a bit different according to these things that we have discussed. This first moment. Second moment, market right now stands in the resistance. So we have reached the overbought area and intraday resistance level. So that with the in a row with expectations CPI numbers, this suggests an open door for possible minor retracement. We do not expect any significant drop. Our overall direction is still to the upside, but in the current moment we are watching for a pullback where we could consider the next chance for a possible position taking. Speaking about the taking the short position trading downside on intraday charts, theoretically it is possible, but currently I see it a bit tricky by the few reasons. First, if you will take a look at the dollar index, this is euro currency, so on the dollar index you could see that we have the bearish grabber on follow time frame chart. Whether it's work or not, difficult to say, but this grabber stands in place and this grabber suggests taking out of the stuff. On your side, you could recognize the hand shoulders, indeed. So here we have the shape of the hand shoulders pattern. If you drop your time frame even more to the hourly chart, to the 30-minute chart, you probably will see it. But unfortunately, we have this grabber. That not very good points in the background to consider taking the short position in the euro currency. Second is, if we take a look at the 10-year bonds, you do not see any relax here. So actually with this recent performance, market was standing flat and probably has formed another grabber. So we have 4 grabbers in a row, which shows mine very small pullback, intraday pullback, and setting the new lows every day. This was day closing. So in general, here the situation stands in favor of the further drop of the yields, which is potentially bearish sign for the dollar, and correspondingly it's not very good background for taking short position on the euro currency. Finally, if you'll take a look at the euro, especially on a hourly chart, you do not see yet any clear patterns. So if on the dollar index we have more or less good shape of the reverse hand shoulders, here you could see that market was not able to form it. So it's some kind of a sideways consolidation without no clear shape or something. So it's definitely not enough to make the decision on the scalp short position, especially when the overall background and overall context stands not friendly to this position. So think twice before you will decide taking any shorts on your currency by far. It's more safe to follow in a major direction that we're trying to do. And yes, technical circumstances stand so that downside pullback is possible, but we do not want to take the risk of this trading of this retracement. So whatever it will be, we just will try to use it for position taking on the long side. Taking the short position here, it will be a bit different thing. Finally, by taking a look at the fall time frame chart, here's a few subjects to consider. First is OP target almost has reached, but not quite reached, just for a few pips. So market could keep flirting around it, so it is possible just to complete the OP. At the same time, as a background of the possible retracement, we have considered a minor pattern, possible minor pattern on the lower time frame, the hourly chart. But here, you also could consider this type of action, which is actually some kind of the free drive sell. Why? Because if you will measure the extension of the first drive, you will see that it perfectly fits to 1618, perfectly fits to 127 of the second, where a third drive has been formed. And take a look, second stands at 127 of the first. It's typical combination for the normal looking free drive. So this is a background for a possible pullback. Supposedly, at least in theory, the target of this pattern is below the lows between the second and third drive. Not always it could be reached, but that's what is coming from the theoretical background. We have the growing bearish divergence here as well. So that's the reasons also why we think that it would be better to wait for with the taking the new long position. So just wait for some bounce, some retracement. But at the same time, trading with this retracement might be a really tricky thing. So it's not suitable to everybody. So you will decide, yes, of course, you could use this free drive, please stop slightly above this area or above daily level. But if we will get the clear bearish pattern right on the top on the 15-minute chart, for example, all the better. This is of course possible, so you could try to do this, but it's not our major purpose. This is not our major direction, and we prefer to, as I said, moving with the major trend. And that's this tactic suggests waiting for the dip to buy. So this is our general approach. But nevertheless, as you can see, picture stands more or less interesting. So let's keep watching and see what will happen.